Morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, streaming live from YouTube. We're going to jump right into the gold market, trading last at 1788.10, down about 290. We have seen a little bit of choppiness this morning as we got some of the some economic numbers that are coming out regarding unemployment claims were higher than expected. I think they came out to about 435,000 new claims. But the thing that I want to focus here is on the fact that come Labor Day, we're looking at 7.5 million Americans to lose unemployment aid by Labor Day. And this is coming in on the face of a pandemic that seems to be spreading in Europe. The Delta variant seems to be spreading in Europe to the point where they are considering closing their borders to the U.S. And coming back to this devastating economic data here, once the last check comes, that will be devastating, not to know where the next check will come from. So I think we're leading to what potentially could be a bit of volatility as we move into the later part of this year. And with regards to the fundamentals about the stimulus and the infrastructure package that's being negotiated right now, it's in the table to be approved, but it's just an additional amount of stimulus that is essentially beginning to erode the U.S. dollar at a faster pace. It seems that the markets are basically anticipating that potentially this inflation levels that we're looking at right now are not going to be transitory. And if we go into another lockdown potentially in the European zone, it's going to cause the supply chain a lot of problems with regards to distribution of just basic commodities and products. There is a possibility that we could go into another lockdown, which is unbelievable. And so the question is, how is the market going to deal with this? Well, if we're on the face of potentially a lockdown in the European zone, China had closed their ports actually, I believe for a few weeks. I understand that they are reopening them, but it has caused additional pressure in basically the distribution of supply, another bottleneck in the supply chain. And so when we are looking at tomorrow's meeting in Jackson Hole, and taking into consideration all of these developments that are taking place, I'm not so sure that uh, they are going to lean towards raising interest rates, or even the talking about raising interest rates. Not under this environment. If anything, um, this environment potentially is going to push interest rates even lower in order to stimulate the economy, as they say. I don't believe that interest rates are at all in the cards for the time being. They may talk about it, the rhetoric is going to be there, but I think interest rates, if anything, are going to go down. So how is that going to affect us? Well, I believe the gold market is undervalued, particularly to the levels of inflation that we're dealing with right now. You know, we're looking at about 5.5% inflation according to the economic indicators. And if that is the case, and we're looking at the 10-year note about 137 today, you know, it doesn't take a math teacher or a math science, or, math expert to figure out that we are we're going to be under in terms of purchasing power. And I think this spread is going to increase as the inflation factor becomes more dominant and more permanent. I think we're going to begin to see a lot of money go into precious metals. A lot of money that is afraid to go into digital assets because it's new and it's still uncertain about regulation. But if anything, I believe that the gold and silver market are on the verge of becoming in some way part of this new monetary system. The monetary system, this new system that we're moving into, cannot do it without gold, um, unless we're gonna make everything, fiat and live in a la-la land of fiat currencies and fiat values. Um, which is ironically enough exactly where these guys are taking us, these leaders of us. Following the Keynesian economic system is all about stimulus. Stimulus is stimulus, and it's a way obviously to erode the quality lifestyle for the people. Inflation is a silent killer to the value of our assets in terms of the underlying currency underneath. And so, if your underlying currency is losing value, it will reflect on the appreciation of the assets in that currency, like it has in real estate. And then a lot of these hard assets that now are even using digital assets as a form of transferring value and transferring wealth, which is really what's causing and creating this incredible market in digital currencies. The market that we trade, that I particularly I'm focusing on, is Bitcoin. I think Bitcoin is the leading instrument, the leading currency, digital currency that I believe is going to take a major part in this transformation and this reset that's going on. So let's come back here to the markets and take a look and see where we are and pretty much how we're taking advantage of the situation here. We just published, for the benefit of our subscribers and marketplace, a review featuring gold that I'd like to share with you. And the summary is on August 2021 in our gold weekly report, we said that the weekly trend momentum of 1794 was bearish. The second filter is the variable changing price momentum indicator, which is at 1784 and is also bearish price momentum. The third filter is the Vcpmi, weekly price indicator. And by trading above the 1784, it activated a bullish price momentum with targets of the sell one level of 1796. We accomplished that by the market getting through basically that 1796 area, and which is really the weekly mean as we came into this week, and you can see the market rallied up to 1812, completing the second target of 1810. On August 2021, in our gold weekly report, we said that the weekly trend momentum of 1794 is bearish. The weekly trend momentum of 1794 is the 9-week moving average, which we use as a filter to identify the trend momentum of the market as we came into this week. We have a bearish sentiment. Now, what really is amazing about this algorithm is that at the same time that it gives you the trend momentum and the price momentum, we'll take a look next. The trend momentum basically gives you an idea of the trend of the market, and above the average price it is bullish and below it is bearish. But it also tells you when the market could shift that trend if it closes above 1794, if it is short. And that negates this bearishness that we're looking at, 1794. From where we are, this is the daily average price that was completed on the 25th. And by closing below, activates a bearish price momentum. And automatically it identifies the targets below, which is the buy one level coming into today of 1783, and the weekly average price of 1784 that we talked about. The second filter is the variable changing price momentum indicator, which is the 1784. That's the average price and is also in a bearish price momentum. It is the mean or average price for gold when the price is bearish. The variable price momentum indicator identifies the levels below as targets, which in this case are the buy one level of 1771 and the buy two level of 1759. So we've been trading now back down into the 1784 level that has completed this short trigger and activated now again a bullish price momentum. And when it activates the signal here, the first bar, the previous bar, in using the 15-minute bar close was the completion. The low was 1782.90. The buy one level coming into today was 1783. And we reverted from here. Now we have activated 1796 again. Right below it is 1794. So for those that went long here, we went long here at 1783. We're looking at a target of 1794. And this is what we recommended to our traders here in our live trading room, very specifically indicating when the market has activated the trigger point. So if we go back to the report, and since we published the report, let me see here for a minute. The third filter is the Vcpmi weekly indicator, which identifies the targets above or below the market. This is where the vortex mathematics comes into the algorithm, that it uses the average price to extrapolate the levels above or below. In this case, by trading above 1784, it has activated a bullish price momentum with targets of the sell one level of 1796 to the sell two level of 1810 for this week. This was published on Saturday. So the market is following the pattern as expected. Since we published the report, the gold market made a high of 1812. It was close to the weekly target of 1810, which completed the pattern. It then reverted and closed below. This was the level at which the Vcpmi recommended to take profits. It then activated a short trigger, and the weekly levels below came into play, which were also met at 1796, which was the sell one level. Now the weekly and daily numbers are in conflict. Now the target is 1784, which was just completed today, and gold is in a weekly bearish pattern, but we completed 1784. So we have reverted from 1784 now, moving forward in the review of this report, and we have activated again the target of 1794 to 1796. In silver, we're looking at a signal, a buy signal being activated from the buy one level of 2363. The only thing about the signal is the conflicting signal that is essentially the weekly sell one level of 2367. So we are in a bit of a conflicting signal here between the weekly buy at 2367. I'm sorry, the weekly sell at 2367 and the weekly buy at 2363. So it is a bit of a mixed signal, and that tells you pretty much, what you want to do. If you want to take the risk, then you can use one of the three stops that we recommend. Going to be a quiet day as the market is digesting some of this economic news that came out and putting it into context of this Jackson Hole meeting that we're looking at tomorrow. So the market is going to be a bit choppy. But as you can see, even in this choppiness here, the algorithm, the Vcpmi, produces signals. It's not 100% right all the time. What we're dealing with is probability model here that identifies the extreme levels of the supply and demand and where pretty much the speculation takes place, within the structure of the market, whether it's a day trade, a swing trade, or a position trade. For the purposes of identifying the speculation in the market, as you can see here, the extreme below the mean at 1783 pretty much came in and recommended that you cover any previous speculation about selling the market. And it gives you a very specific criteria. On the first bar, the target is completed, and you go neutral. And then you wait for the next bar, and if it closes above, it activates a buy trigger. In this case, the buy trigger was in gold. It closed at 1785.40, and automatically the targets above are activated. The initial target is 1794, and the sell one weekly target is 1796. Now, the market activated a daily buy signal and a weekly bullish price momentum. And pretty much you can see the resolution of that momentum into the target zones as anticipated. So let's just watch the market here accomplish these targets here, and we'll take a look and see what it does when it gets up there. If you bought the signal here early this morning and we published in the room, you want to trail it if you are holding on to the target and you get this kind of a move. I recommend, if you're doing multiples on the first contract, you want to take, if you make more than $300, then you should book one, the first one at least. Then you can trail the stop on this move and capture if you want. If you want to maximize the target, then you trail the stop on this second contract if you have, or as many as you have, and use these levels to accomplish the trade. Or if you bought it at 85 and it's at 91.90, trail the position with a stop where you can protect the integrity of your profits if the market reverses. So this is a systematic way, a methodical way of applying the Vcpmi for day trading, for swing trading, or for position trading. If we take a look at the monthly signals, pretty much you can see that the market coming up to 1812 was the monthly average of 1809 completed on the 24th at 6:45 a.m. And you can see the market receiving pressure from the supply that's coming into the market that is reverting the market on the average above and below. And this is why I say when you get to the average price, you complete your target, you go neutral. Don't trade around the average because it can be very choppy. But what it does is it identifies the price momentum. And here, the price momentum turned bearish, and automatically, when it turns bearish, the target below is activated. So below the 1771, or I should say, if we include the monthly buy one level at 1778, it's within the area of accumulation of supply that you can see here, the market showing tremendous amount of buying coming in. So this is a phenomenal tool that is completely mathematical. It uses the law of probabilities mathematically with extreme accuracy. As you can see, our target of 1794 is within a striking distance. Continue to maintain your core position and use any correction in these markets to accumulate or trade from the long side. Thank you again, everybody, for the opportunity to share this incredible tool with you. And in the meantime, please have a safe day, have a great trading day, and take some profits off the table at 1794, will you? I'll talk to you soon.